And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fine futures family, and welcome to the market forecast for Thursday, December the 15th. Only 10 days till Santa comes. Hopefully, if you're in the markets, you've got things going your way already. Lots of data already out this morning. As always, my focus, I should say, is accurate context, good risk management, and patience. Patience in your trading. So, lots of numbers coming out. We're going to take a quick look at them. I am not an economist, but these numbers say to me that the economy is certainly beginning to slow. Jobless claims. Initial jobless claims last week was 230,000. That's what they were expecting this week. Came out lower than that at 211,000. Continuing jobless claims stayed exactly what they were last week, 1,671,000, and that's what came out. Philly Fed, they were looking for minus 10, came out minus 13.8. Retail sales last month over month, was 1.3% higher. They were looking for 0.1% lower. It came out minus 6.6%. So continuing slowing of retail sales. The Empire State Manufacturing Index also close, similar to the Philly Fed, but a little bit deeper. They were looking for minus 1. It came out at minus 11.2. We're still waiting for industrial production, business inventories, and of course natural gas after the forecast here. So U.S. stocks were heading lower, were lower prior to the data dump this morning. It looks like the pressure is still on to the short side. We've got our equities almost, well, we got the Dow, we got the NASDAQ almost 2% lower for a minute there. And about 1.5% lower overall. The ECB, the Bank of Europe, and the Swiss National Bank all raised their key rates today by 50 basis points. There's an ECB press conference going on right now as we speak. But the ECB is the rate is now 2.5%. The Bank of England now 3.5%, and the Swiss National Bank raised rates by 50 basis points to 1%. Doesn't seem like they're doing that bad there. The Swiss National Bank, however, did state that they are expecting more hikes to be needed. I would think so. So the U.S. says they're slowing the rate of increases of rates, and in the same breath, seeing potential for a higher eventual peak for rates. So a higher terminal rate, probably for a longer period of time, is why I think the markets took the dive to the downside yesterday. Everything seems to be about rates, of course, and inflation. Crude prices have steadied this morning as the U.S. dollar was strong this morning. It has weakened. We have seen the euro pop after the ECB rate decision. We saw the dollar come off a little bit. Gold still remains lower. The metal's still suffering a pretty good downside move overnight. We're going to see all of this in the charts very shortly, and take a quick look at the VIX is up about 2% this morning, 2164. Still not a very high number of volatility. The fear factor not really in the markets here, and hopefully it won't be. The dollar index down slightly at 104.06. Just last time I checked, it's been higher, it's been lower. Basically, settlement right now. The yield on the 10-year still kind of hanging around that 3.5, a little lower here, 3.48%. As always, if you like what you see, tell everybody and hit the lucky like button. Share, comment, question, feedback, heckling, and lover. Always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. We're glad that you're here. Your success is our goal. We are working together to try and see as many of you succeed at this as possible. And I believe every one of you has the opportunity and the ability to succeed. We just got to get in the right situation, right mindset, right strategy, and let's just kill it. All right? So, good morning to everybody. I've got Charles March, first one in the room. Charles, you win the prize this morning. Shaw Cunningham, happy Thursday. Spencer, Hagel Matters, good morning. Jules, Caesar, Stephen, George, Bill, Caprice, Terry King, Joe, good morning. Rob T, Three Lions. The Rooster crowing this morning. Good morning. It's good to see everybody up and at 'em this morning. Dowitzer, DA, Sarah Hall, prayers and love to you as well. Jay Dowitzer finally passed 150 step 2 account to get funded. Nice job, Dowitzer. Nice job. Just dance with the one you brung, my man. Just dance with the one you brung. It's not time to change everything. It's time to do what got you there. I'm very happy for you, and I know we all are. Dan Trader, good morning. Razmik, Marcelo, Joe, Caesar, Scott saw, and he conquered. Marcelo, Jason, Alejandro, Chad, Dr. Mumu. Oh, hello, Dr. Mumu. Putting in the O'Hare trade long. Yes. Yikes. Dennis, good morning. Dowitzer. Step 1 only took me 8 days. Step 2, a whole different story. 46 days. The consistency rule was a tough one. Well, Dowitzer, you are a better trader for sticking it out, taking what it took to get through that step 2. Again, looking forward to your continued success. Glitter Sandwich, good morning. Joe with a hypo, responsive rally to 4,000. 4,000 is a major gamma level, large put level. All right. We'll keep an eye on that. Where are we now? We're not too far from that. It is part of the overnight range, so we'll keep an eye on that. Thank you very much for that info, Joe. Joel MB, good morning. Dowitzer, but step 2, consistency rule, hindsight has maybe. See, there you go. I just said it. You just said it. We are in agreement there. That's a fantastic, fantastic thing that you did. JT, John, Ori, and Dark Heaven, stopped leaving my trades run and only trade while I'm at the PC, and things have been going a lot better for me. Nice job, Dark Kevin. Dark Kevin, you finding ways to get to your success. We're always happy about that. JD and Dr. VJ is in the house today, Doctor. It's always a pleasure to see you and to have you with us. So this is, I think, going to be it for the events on YouTube today. Tomorrow we'll have the forecast, but we are done now. We're not going to be having group coaching today. Got a long meeting today, so we're not gonna be able to do that. Next week we'll have the forecast and recaps as usual, but no group coaching, no make Hogue money. The next week we're all going to be off. The week between Christmas and New Year's, no events, and then we start fresh and strong in January. Looking forward to getting started with a new year, kind of feeling like I'm starting fresh. I got a dog over here demanding to be pet, so I'm petting her. Do you want to come up and say hello? Want to come up and say hello? Come on. No? No? You just want to look at me and pet, wag your tail? Okay. We'll get you out shortly there, Lacey. All right, so time to jump into the charts. We have energies in rollover. We have equities in rollover. We have currencies in rollover. Treasuries, however, are not in rollover. Metals are neither. So we've got 3 out of the normal products that we look at here that are in rollover. It's important to remember that, because if you're using all of the levers of the auction process, including volume and open interest, it makes things a little bit more blurry for day traders to be successful trading during rollover, because the information is split between different months. You've got longer time frame traders attempting to get a cheap rollover. They try not to become directional. We've seen some directional moves this week. I think it's been a tough roll for our longer time frame, but don't worry, they're going to be fine. Let's jump in now with the S&Ps. Dean, I hope the very best and a happy Christmas to you as well. All right, here's the S&P daily chart. No, Lacey. Come here, Lace. No, don't go down there. I know what you're doing. Okay. You stay right here. I'll pet you. Okay. Here's the daily in the S&Ps. Well, what does this what does this say? I mean, aside from a couple of anomalies, maybe to the upside, we've been kind of stuck in this area of balance for a month, right? I mean, here's the 11th of November. We haven't moved all that far, so I'm kind of looking at range-bound rules. We do have expiration, the December expiration for the equities tomorrow. So that'll mark the end of rollover. Next week, things will go back to normal as far as our ability to see volume and open interest as a usable tool. We had a dated deluge this morning, so the market has already been pushed to the downside, quite a bit in the overnight. But overall, we're still range bound. The lower extreme. Yeah, it is starting to look more like a head and shoulders to us, right? We've got the market up here. We've got a shoulder. We've got a head. We've got a shoulder. We'll take a look at where the measured move may take us in that regard. So we kind of largely range bound overall. Possible head and shoulders. We'll check the neckline here shortly, which I believe really the neckline is last week's low. The lower extreme of this area of balance I'm kind of viewing as a 15-point area, 3960 to 3945. 3945 was last week's low. 3960, basically the bottoms of these candle bodies here. Every time we've been down here recently, we've run into buyers, and we may run into them again. Who knows? It's kind of why I'm viewing last week's low as the neckline for our potential head and shoulders. Now let's take a look at where the profit target would be if we're going to measure from the top of the head to the neckline, basically here. Upon acceptance below the neckline, that's going to take us down to around 3760, which takes us down to this area of potential support. So if this is indeed a head and shoulders, and we do break out the bottom of the neckline, that would be our real target for this move to the downside. We still are range bound, however, so until we accept below that level, I'm looking for opportunities for executions at the extremes here, whether we're going to fail at a breakout below and head back higher, or if we're going to accept below and then finish perhaps our head and shoulders target, which is considerably lower. Looks like we kind of did that in one day on the way up, right? So take a look at the 30-minute chart here. Good eye, Edward. So here's the 30-minute chart. Good morning, Vince. So we've got overnight inventory severely short. The information that came out this morning did no real help for us to bring price back into range or towards settlement or the high or the value area from yesterday. Yesterday's value area inside the previous value area, though the range itself was overlapping to lower. So we're kind of looking at gap rules here. We're also kind of getting pretty close to the area of potential support at the lower end of the area of balance that we're currently in. Okay, so we've got a negative point of control here. It looks like we're going to probably touch that relatively quickly. So, I'm looking at gap rules. If we can't close the gap, I'll look for a move probably to the lower end of the range of the balance area that we're in to look for opportunities. And there's always the possibility that, all of these overnight shorts could get nervous at any time and push us back towards where it started. Where it started is right up here. So that would be a move all the way back up to settlement. Be cautious about that. If all of these overnight shorts decide to bail, that could be a pretty decent upside move. All right, take a look now at crude oil, just opening up. We're going to be trading February tomorrow. The volume is still a little higher. By the end of the day, the February contract will probably higher volume, but for now, the volume was higher in January, so I'm going to stick with the January contract if I'm trading crude oil today. That's just me. You can move to the next month if you want to. The volume is really close to even. The longer time frame, the market is putting in lower lows and lower highs. In the longer time frame, it's still a downside market. We've had a pretty decent upside auction here, 1, 2, 3 days. One time framing to the upside. My question is, how good of a job is it doing? What is the performance of this rally? And it's difficult again to tell because of rollover. We lost 20,000 contracts on a move to the upside yesterday, which would indicate short covering, which does take buying power away from the market. So we've got, looks like a relatively even high here, 75, 77. We took a 2-tick move above yesterday's extended trading hour high, and now we're kind of coming off of that. So when in rollover, it's difficult again to gauge the performance of the auction process. We've had a pretty decent up move, but during rollover. Here's the 30-minute chart. Closed the other day above weekly kickoff high. Closed above weekly kickoff high today. Do we have any overnight inventory? Maybe we're getting a little bit short here. We have yet to take out the overnight low. Overnight high looks like kind of interesting areas. If we can't hold the overnight low, a test of weekly kickoff low, then we've got some visuals down below that with which to kind of go ahead and repair. We're going to try and stay patient today because the market did largely open in the center of the range yesterday, close to value low. I'm thinking better trade locations may come as the day goes on. Take a look at the TPO chart here. We didn't look at the TPO chart in the S&Ps, but that's all right. Here we are. We've just opened. We're in range. We're in value. In TPO, look at the value area up here from yesterday. That does not appear to be correct. There may be some display error with that here on TS Trader, but at least we've got the TPO value low here, value high here. We're inside of it. There's no rush to get into anything today. We had, some pretty big boost in crude stocks yesterday, and the market drove higher. Would you call that good performance? Again, we lost open interest, so if we weren't in rollover, I would look at that and say, okay, this market is probably tiring to the upside, but because it's rollover, it makes it a lot more unclear. NASDAQ. Range. This speaks nothing but range to me. We're right in the middle of last week's range. We are, it just says balance to me. Again, expiration is tomorrow. We lost 7,400 on open interest yesterday, probably due to rollover. The lower extreme of this area of balance, I'm looking at 11,600 to last week's low of 11,535. It's a kind of a wide range to be looking for opportunities, but this is the area where buyers were found recently. They may be found again. Take a look at the 30. Okay, similar. We got the naked patrol, point of control, very similar to the S&Ps. Overnight inventory short. Potential for a gap open. Gap rules will apply. If we can't close the gap relatively early, we look for opportunities in the direction of the gap. Murph, it all depends on how you look at it. Here's that daily. Shoulder, head, shoulder. It's up to you. I'm viewing it as more of an area of balance. And that's just me. I've been wrong before, Murph. I have been wrong before. All right. Take a look at gold now. Balance. Last week's high, we took a look above it, couldn't sustain it, couldn't sustain above weekly kickoff. Last week's low, taking a look at it today, weekly kickoff, central location, short time frame control, ladies and gentlemen. We only lost 400 in open interest yesterday. 400, very narrow regular trading hour session range yesterday. Here it is. The 1 o'clock numbers actually occurred after the regular trading hour close in gold. So they don't, that's where all the volume was. Do we add that to this? I mean, technically that's not really the close. But still, we're opening with a gap. We've got some serious overnight inventory to the short side near the low end of the area of balance. If I had my druthers, I would love an opportunity to look for an execution around last week's low. We got the euro higher on the day now. Dollar must be weakening. It is. Dollar's taking a dive to the downside. That's probably going to scare some of these overnight shorts. Just saying. Here's the euro. The euro is lower at one point today, considerably lower, and look at it now. Yesterday, we added 14,000 in open interest. Again, it's rollover, but if it wasn't rollover, I would say that this upside auction is doing a very good job. And it appears to be continuing to do that today. Again, it's going to roll tomorrow. Last week's high, very interesting for an execution if we could have gotten it. It happened overnight. Again, open interest is blurry, but still bringing in business. Here's the 30-minute chart. Look at that. From below yesterday's range to above yesterday's range. Yesterday's extended trading hour high, right in the neighborhood. Take a look at the TPO chart. Value low, driving higher. Very normal trading day, not a normal trading day, but just a regular normal variation trading day. Very even bell curve yesterday. You've got right here in my notes that this market is going to be seeking new levels to facilitate trade. And look what it's doing. Here's the 10-year. Range. Still range bound. Balance. Consolidating. Chopping. We're in short time frame control still here, ladies and gentlemen. We lost 62,000 in open interest yesterday. Find that to be somewhat interesting. But don't forget, I mean, we are in range-bound area here. This is short time frame control. Short time frame levels may be respected at any time because we're kind of in the middle here. Problem with that is there's going to be a lot of short time levels with which to choose from. I'm going to be waiting for daytime frame structure to tell me where a potential high and a potential low might be, and then I'm going to look to those levels for opportunities because they allow me to limit risk. Okay, we didn't really have any overnight inventory here. We're starting to see a little bit of activity. Better trade locations are likely later on after the open, and it seems to be true right now. Here's the 730 bar just kind of closing and then coming back off. Better trade locations likely to come as the day goes on. Take a look at the TPO chart in this market. Excess on the lows here. No excess here. This market leaves a lot of unfinished upside and downside moves. We also have an unfinished upside auction here. Unfinished upside auction here. Excess, unfinished. Makes sense for this market to kind of come back up and test the highs here. And we're probably going to take off the natural gas and focus more on our more popular products, but just to take a look at it. Volume continuing to maintain, even though it's in rollover. This market will roll next week into the February contract. Gap close yesterday. There's the gap close. Last week's high somehow supportive. Anyways, we're in range, we're in value. I didn't get the settlement on here. It's $6.43, right about here. No real overnight inventory. We're starting to see some movement away, possibly from value this morning. We got another gap above, naked point of control. There's all kinds of targets in this market. It's going to make it very difficult to trade if it isn't difficult enough. This market is crazy. Good morning, Jimmy. You guys have some really good comments here about Julie talking about options. Some good comments here. Like you guys are looking at those chart patterns, seeing those. It's good. All right. So again, we've got a little bit more information coming out as the day goes on today. Business inventories at 9 o'clock. Industrial production just about to come out. So just keep an eye on that. It's probably a kind of a secondary as far as the impact on the markets. Don't forget, tomorrow is quadruple witching. And we've got Mary Daly, one of the Fed members, speaking tomorrow at 11 a.m. And before that, 8:45, the PMI composite flash. So little information, but could be impactful with that PMI composite flash. And talking Fed, they are open to be able to speak again after the FOMC meeting. And I'm sure lots of folks will be focusing on all of that. So, again, no group coaching today. No, well, we wouldn't do that on Thursday, but no make whole money this morning, or in the afternoon again. Got to get to a big meeting, and we'll look forward to a good successful trading day for all of you again. Dowitzer finishing step 2. Congratulations again. We're very excited for you. Love it when you guys tell me of your successes and your lacks of success. It's never one-sided in this in futures and in anything really. Futures and in anything. Success is never a straight line. It's more of a big squiggly line that goes high, goes low, and at the end, if you end up better than you were, you've been somewhat successful. So glad the camera's fixed. It was nothing. All I had to do was restart my computer, but I didn't open up the studio early enough to be able to do that yesterday. So, but I appreciate that. Appreciate that, backer. Let's take our deep breath. Be humble, grateful, and creative in your trading today. It looks like we've got another step 2 pass here in the 150K. Midhun has been successful on step 2. That's great. That's 2 today. We can go for a hat trick. Yes, you will get it back, Rooster. You will get it back. Keep crowing. But Midhun, congratulations. Very proud of you. Very excited to see your continued success. Just dance with the one you brung. All right. We took our deep breath. We're going to remember to stay humble, grateful, creative, and centered in your trading today. The less you lose, the more you stand to make. Remember that. And we're all here to trade for tomorrow. We want to be here to trade for tomorrow. All right. So get out there. Probably not going to be all that involved in the markets today. Got busy things to do. But I will look forward to seeing you all tomorrow morning and hopefully seeing a couple of more step 2 successes. That would be very happy for me. And we'll look forward to seeing you then. So get out there, profit, trade well, trade for tomorrow, all those cliches that we always say. But again, looking forward to your success and so happy to see some success here this morning. Make sure you guys tell me about all that stuff. It's wonderful to hear. Makes me very happy. And you want Hogue happy. Trade well today.